Hey, Luke, very good to see you. As always, as we know by the Christmas tree behind you, the end of the year is upon us, and you are always trying to think of ways to help your clients lessen their tax burden. And you mentioned there's a really good option for people who want to make a donation to charity and have a very large retirement account. What is it?
So yeah, what we're referring to is what's called a QCD, otherwise known as a qualified charitable distribution. As I always like to say, it pays to be a good person, but it doesn't necessarily have to pay the government as well. So
It's a
if you
good
can
saying.
take advantage of, donating to a qualified charity or nonprofit organization and keep Uncle Sam's hands out of your pockets, it's always a nice touch.
And so explain what we're looking at here. How does this work? Because I know IRAs are loaded with taxes. So it's a really good way to kind of give to charity, but kind of bypass those taxes with the government.
Absolutely. Yes. So if you know you've got a large 401k or IRA balance, you know every single dollar that comes out of that into your hands is going to be fully taxable. So what we can do with a QCD is bypass yourself and have the distribution go directly to the charity so that you get the full tax advantage of writing that amount of money off of your adjusted gross income in a given year. If you were to take the distribution to yourself and then make a cash donation to a charity or nonprofit, you miss out on that opportunity.
All right. And now, Luke, this is a little bit different because of the CARES Act. Can you explain that for me?
Yeah, so full disclosure, it's a bit of a wash this year, just given what was passed in the CARES Act, which is that you can deduct 100% of your charitable contribution. So it's not as big of a difference here in the year 2021. Now, set in 2022, we're going to revert to the old tax law, which is that you can only write off a portion of your charitable donations based on whatever your income level is at. So we still love the QCD as an opportunity here late in the year, especially if you're going to be also doing some Roth planning, which we've had several videos on, and we've been discussing with our clients, because if you're over RMD age, if you're taking required minimum distributions, you can have your RMD go directly to a qualified charity that meets your RMD, and then you can further do Roth planning over the top of that without having your RMD show up as income. So it can be a really nice option.
Yes, I can see many, many benefits to this. So just to underscore then, explain one more time how using funds from my IRA for a QCD is even better than a tax deduction.
So it's even better than a tax deduction because of that exact fact. It never shows up as income. It's going to go directly from your IRA balance to your qualified charity. And then also with deductions, a lot of people, if you're not itemizing your deductions, you're under the standard deduction anyway. Some people can miss out on that tax advantage altogether because they either don't know about it or they don't have enough other deductions to itemize. And again, it's based on your income as well. So you don't get the advantage of 100% deductibility on charitable contributions. It is based on your income, and that's the tax law that we're going to be reverting back to next year.
All right. Well, I can see there are many, many benefits to why people should consider this, but also it is very complicated. What's the best way for somebody to reach you if, again, the end of the year is coming and they'd like to talk this through with you?
Sure. Yeah. On our website, www.icanberryretirement.com, there is a schedule an appointment button on the website that will actually pull up my calendar as well as Nick's calendar, and you can definitely set up an appointment with us in that fashion. Obviously, we're getting towards the end of the year here. Like you said, we've got my festive decorations here behind me, but we can still get these accomplished.
Right.
It's a bit of a push for time, but if it's something where you're giving money to charity anyway, and you're thinking, you know what, this makes a lot of sense for me. I don't necessarily need my required minimum distribution, and I'm already given to, an organization, then this is a great way to make it pay off for yourself and for the charity.
Yeah, very well said. Luke, thank you.
Awesome. Thanks, Aaron.